After 7 straight days of gains, which took the Nifty to 20,000, the benchmark index sees a small pullback. The Nifty, after hitting 20,100 in early trade, cools off. Midcaps and small caps see sharper pullbacks after opening higher today. Both indices are 3 to 4% lower from the opening high. Big pullback in stocks like RVNL, Realty, Cochin, Shipyard, as well as REC with C between 5 to 8% cuts. All eyes on macros today. A CNBC-TV18 poll expects CPI inflation to come in at 7.08%, above the RBI's target band, and industrial production in July, meanwhile, is estimated to have grown at 5.2%. Global investment firm KKR will invest an additional 2,069 crore rupees in Reliance Retail Ventures Limited. KKR's follow-on investment will take its total equity stake to 1.42% in the company, which is valued at $100 billion. Road Transport Minister Nitin Gadkari says that the only way to phase out diesel vehicles is by imposing heavy taxation, urges Finance Minister Nirmala Sitharaman to impose an additional 10% GST. Addressing automakers, he says that he will increase taxes so much that it will become difficult for you to sell. Shares of Ashok Leyland, Tata Motors and Mahindra slip in trade. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Poddar, and with me as always is Pavitra Parekh from the New Delhi studio. So there you go, Pavitra, away from the Mumbai studio for today. But look at the markets today and what a turn of events we have seen, especially in the demand area of mid-caps as well as the small caps area. Let's look at Nifty 50 first. Of course, the record levels of 20,110 levels. That is elusive now. It has given up the 20,000 levels, but it has primarily been in a band with 200 points up and down in the trading session. Right now is down 0.1% in trade. When we talk about Sensex, that's on the flat line, and Bank Nifty also is now 0.4% down. So it has dipped into weakness, but the real weakness is coming in from what was the actual pocket of strength for so many trading sessions, which is the mid-cap universe of about 2.8% down in trade, and so is the small cap universe down. Advanced decline ratio heavily in favor of the declines today. So there is weakness in the market, but some of the counters on Nifty 50, the big ones like L&T, TCS, Grasim, Infi, Divi's Lab, all of them are really holding on and showing the momentum. So it's the frontline indices on the flat line, but mid-caps taking a huge brunt, and along with that, Bank Nifty also not doing too well. Pavitra.
Oh, absolutely. On the mid-cap index, all of last week we were talking about the 3.5% kind of rally that we've seen through the week. Pretty much all of that is wiped out in this single session. So it's definitely a lot of selling pressure that we've seen in this pocket. Even for the Nifty, from the top of the session, it's a 155-point cut that we've seen. I just want to point out that within the mid-cap space, it is some of these names that usually run up very fast and very hard, which are coming off today. So a lot of the defense names, a lot of the shipbuilders, railway stocks, sugar stocks, that entire basket which has been buzzing around. So the likes of Cochin, Garden Reach, Mazgon Dock, all of these will be up for you on your screen, and you can see the kind of pressure that we're seeing on these names today. These are the rail stocks as well, which are seeing big cuts. From the larger names, it is a lot of the PSU stocks, which again we've been talking about the fact that they had a solid rally last week. The PSU index was up 5.5%. So a lot of those stocks correcting as well. So the likes of BPCL, NTPC, Power Grid seeing some cuts, and real estate also tanking. But what's in the green? Surprise, surprise, it is the IT pack. You have names like TCS, which is pretty much at a fresh 52-week high the last time I checked, so that is doing very well. Infi also doing well, and some of the consumption names are bouncing, which have been a little bit soft in trade. That's the shape of the market. We're going to keep coming back to this, but first up, we have a lot of opinion that we have put together for you. We've been speaking to market experts through the day, and ever since we did scale that 20,000 mark on the Nifty as well. And opinion is very divided. While some people say that this is a solid bull market, there's lots more to go in terms of a rally, there are people who are now saying that this is a bit of a euphoric situation and it is time to exercise caution. So let's listen in to all of those divergent views.
I feel where the market is heading or what my targets were, I see that there is still more upside going ahead. As I said, there's a lot of panic, there's a lot of talk of bubble, and there's a lot of talk of all that. I don't think we are anywhere near bubble territory. I think that there is more upside. And what I say is that you've seen 11% and you're like getting this thing, that we can have another 8, 10, 9, 10%, And a lot of people say that, oh, you want to sell out this segment, we should get out, blah, blah, blah. You never know. You could be missing a more interesting part in the market.
Clearly believe that in the near term, there is now catching up to do from the large cap side. I think when you look at stocks which offer you value on fundamental basis, more large caps pop up than the micro caps and the small caps. I think there's a lot of fear of missing out, a lot of momentum, a lot of theme-based investing, particularly from the mass retail, which is happening on the smaller companies. And, I would, really believe that it is time now for the large caps to do some catching up. And, Nifty at like less than 18 times PE clearly offers more value than some of the smaller companies.
It's not a destination. And you will see many thousands like this, 20,000, 25,000, 30,000. Only problem is with the speed where the market is rising. That could be a little worrisome and all. And I will tell you one example. Pratyaksham kim pramanam, as they say, that I have not sold any shares, and whatever shares if I have sold, I have put them into some I have bought some other shares. So I'm bullish in the market. It's a journey. It will keep on happening, and stocks will keep on rising and falling and churning, and all these things will happen in this market.
I think this move in mid-small caps up nearly 35 to 40% since last 6 months, when globally Fed is tightening, balance sheet is contracting, would be a bit worrisome. So again, that's something we've been doing since, I would say, last 2-3 months. Look at our mid-cap portfolio, some of these mid-cap names, whether it's hospitals, real estate, or other sectors. Look, we've owned them for 5-7 years, but look, valuations look kind of fairly full here. So what we're doing is top slicing probably 10-15% and moving that to large caps.
All right, those were some of the expert opinions coming in the mid-cap sell-off that we saw today. Now, India's August CPI, which will be announced today, is expected to come in at 7.08%. It's an important macro data to look at, and 7.08% is as per CNBC-TV18's poll. Now, this is way above, remember, the 6% cap by RBI, but below the 7.44% in July. Lata Venkatesh is right here to put all those numbers into perspective and also what is expected today. Lata.
Actually, 7.08, as you said, the poll compared to 7.44 in July. So it's really not fallen much despite tomatoes becoming a little more normalized in their prices. And remember, this 7.08 comes over a 7% last year, same month. So that is not very good that year over year it is 7%. The poll sees core inflation lower at 4.8. That's very important. RBI often looks at the core inflation because food and fuel are more volatile. 4.8, that compares with 5.9 year ago. So that's a genuine fall. And even compared to last month, July, when it was 4.9. The culprit, as you said, is food inflation, expected to come in double digits, 10%, which may still be a little better than 11.5% in July, but still it's no good. So that would continue to be a worry because for the Reserve Bank, it has to be below the 6% mark for the MPC as well. MPC will be on hold till they see it sustainably going towards 4. But for Reserve Bank, if it comes well above 7, then you can expect more tightening. So let's pray it comes a little below 7. That will be psychologically satisfying. And finally, there is also the IIP number which comes out, industrial output number for July. Will be watched. Our poll threw up 5.2%. Again, that's a volatile number. So if it comes below that, it will be a bit of a disappointment on growth.
All right, Lata, thanks a lot for getting us all of the details in terms of what we can expect in the macro front today, both on the CPI and IIP. But with that, it is time for a short break. On the other side, another big headline, KKR will invest over 2,000 crore rupees in Reliance Retail. We're going to bring you all of the details when we come back, so stay tuned for that big one. Welcome back. You're still tuned into Business Lunch here on CNBC-TV18. Now let's talk about an important story. Reliance Retail gets more investors to join its $100 billion club, with KKR making its follow-on investment in the retail giant now. Nisha is here to tell us more about this. Nisha, another show of confidence in Reliance Retail.
That's right. More investors joined the Reliance Retail's $100 billion club. In the latest, KKR has made a follow-on investment of 2,070 crore rupees in the retail arm of Reliance Industries to buy 0.25% stake at 8.36 lakh crores of valuation in rupee terms. Now, with this investment, KKR's total stake in RRVL will increase to 1.42% stake from 1.17% stake on a fully diluted basis. Now, the last investment, remember, for KKR in this company was at half the valuation 3 years back. Now, looking at the second round of fundraising at $100 billion, which started just before its AGM in August, well, Reliance Retail has now raised a total of 10,347 crore rupees by selling 1.24% stake to Qatar Investment Authority and now KKR. Mukesh Ambani had hinted at a strong global interest in his retail business in the last AGM of Reliance Industries. Now remember, it comes after 3 years of the last fundraise at around $50 billion valuation, in which a slew of these marquee global investors like Silver Lake, KKR, Adia, GIC, TPG, amongst others, had pumped in over 47,000 crore rupees for 10.5% stake in the retail arm. Double the valuation comes on account of the scorching pace of growth for the company, as the chairman guided that retail will be the fastest growing business in terms of revenues as well as EBITDA. Now, sample this. Reliance Retail has shown a 30% year-on-year revenue growth in FY23, which is faster than the other business verticals of RIL. Now, in terms of its financials, 2.6 lakh crores of revenues, EBITDA of 17,900 crores, and profits of over 9,000 crore rupees. So strong on profit as well as profitability. In Mukesh Ambani's words, based on this valuation, Reliance Retail, had it been listed, would have ranked amongst the top 4 companies in India and top 10 retailers globally, as Reliance Retail gets yet another investor to reinforce its $100 billion valuation.
All right, Nisha, thanks a lot for getting us all of those very interesting details on Reliance Retail and KKR pumping in that other round of cash now. Standard Reliance disclaimer on your screen. The channel that you're watching currently, CNBC-TV18, is owned and operated by Reliance Industries. With that, we do need to get into a short break now, but when we come back, we're going to get you some comments from the UK Chancellor, Jeremy Hunt, on the free trade agreement. So stay tuned for that very interesting piece as well.
Welcome back. You're watching Business Lunch, and Sensex Nifty on the flat line with a green bias. But let's focus on the auto stocks, and they are trying to limp back from the lowest point of the trading session. Remember that these auto stocks had come under pressure because of Road Ministry's comment coming in, Nitin Gadkari's comments on diesel vehicles and for higher taxation on them. And Road Minister now clarifies that there is no proposal of additional tax on the diesel vehicles under active consideration. And they also say that government is not considering additional GST tax on diesel vehicles. So this is an important clarificatory statement coming in. And the impact is already visible on the auto stocks. You can see them trying to recover from the low point of the session. So keep an eye out on that. Moving on, then, talks on the free trade agreement between India and the United Kingdom are closer to being done than ever. In an exclusive interview to CNBC-TV18, well, the UK Finance Minister Jeremy Hunt makes it clear that UK will only sign the FTA only if it serves British interest. He also added that listing Indian companies on the London Stock Exchange is being discussed with an urgency. Let's listen in.
So there's a really exciting deal to be done, but it's new territory for India, it's new territory for the UK. I think we're closer to a deal than we've ever been. That doesn't mean it's guaranteed we'll get a deal. Rishi Sunak has been very clear, we'll only sign a deal when it's the right deal for the UK. Big pools of capital that UK-based investors would love to invest in India. This is a great strength for the British economy, and we want to unlock that capital. So the infrastructure bridge is a way of seeing if we can get more international funding for Indian capital projects using the great strengths of the UK as a financial centre. I think we are very clear that we want to see real money flow into Indian infrastructure, and we'd like to see that happen soon. The London Stock Exchange to become Europe's NASDAQ, or even better than Europe's NASDAQ, and we want to give that opportunity to Indian companies as well to benefit from being able to raise capital internationally. Well, we've had lots of discussions about timelines, and I always think it jinxes discussions if you start giving a public deadline. But what I can say is that there was an urgency and a determination to conclude these discussions successfully.
All right, that is the word coming in from the UK Chancellor. But with that, we're going to have to wind down on this edition of Business Lunch with the news that the markets are absolutely flat, just at that 20,000 mark. But the mid-caps are a whole other story. They've been a whole other story for a while now, but this time on the downside. Over 1,000 points still in terms of a cut that we're seeing for the mid-cap index. So really not much of a respite there at all. Thanks for tuning in. We have Mid-Cap Radar up next.